Thanks for joining us today here on America's Retirement Headquarters. It's home of the Retirement Guys formula at America's Medicare Associates with Nolan Baker and Dave Ross. 419-794-3030. That is the phone number, how you can reach out to the guys. You can also go to the website, arhq.com. If you missed the first half of the show, previous editions of the show, you want to catch up, check out more videos available on YouTube, available on Spotify, Apple Podcasts, wherever you consume your podcast. Just search for America's Retirement Headquarters. All the previous editions and segments there for you to check out whenever you are ready. There's a new study from Global Atlantic that says 61% of retirees would rather preserve their money than grow it. The study went on to show that 65% want an income for life, 69% reported discussing loss prevention with their advisors. Guys, does the fear of losing money work against some people to the point that they can't grow their money enough to fund that long retirement?
Well, I would certainly agree with a lot of people thinking that way. When you talk about preserving, okay, is there ever a point in time when a 0% return is good? The answer is absolutely there is. So does that mean that you invest conservatively and say, I just don't want to experience losses? This is where doing a stress test of your portfolio is so important. We utilize Riskalyze here at America's Retirement Headquarters. And when we meet with a person, the way we stress test their portfolio is we plug all their investments into some software, and it will kind of give you a speed limit on how fast your money is running. So if you're at a 65 miles per hour, you're pretty much in S&P 500. You're tracking the major indexes. Should you be at that point in retirement time? Most likely not. You kind of want to manage that speed limit to get a little bit, to be a little more, consistent over an extended period of time. I would also say that the other thing that this software does is it talks about if the market has a great year, how much of the upside of the market will you capture versus how much will you lose on the downside if the market is off a little bit or off a lot. And it gives a range with a 95% competency level or confidence level. And when we show clients numbers that say, okay, on this portfolio, you can capture 15.5% of the upside, but on the downside, you're only going to capture 6% on the bottom. So people that were fully invested in 2008, they understand what it's like to see a 40% drop. Mm-hmm. They don't want to see that in retirement time. So therefore, having stress tests, letting us do that work to give you an opportunity to smooth out your ride in retirement, that's very important.
And I think, to me, it really comes down, again, knowing what you want to do and what you want to accomplish. And, retirement time, all roads lead to income. So when we're looking at that, we want to make sure that our retirees in this example, 65% want income for life, 69% reported discussing loss preventions with their advisor. Just as, you talk about creating an investment policy statement, that's going to help somebody to really understand, what a portfolio might experience. And then, as you're traveling throughout this journey, you're meeting with your advisor, as long as you're in those ranges of return, then, you're in the guardrails, getting the things that you want to have accomplished. Taking that a step further, though, I think there can be a lot to be said about some preservation money and some growth money. And it really, again, it comes back to what we build out and what we do here at America's Retirement Headquarters. It's called the independent income system. And with the independent income system, what we're doing is we're looking at having enough income that's going to cover your minimum monthly income needs. I know we had recently had a lady that came into the office, and we took a look at her situation. And when we added up what her minimum monthly income needs were going to be, And what we're able to do is take a look at things like the Social Security, whether she had a pension, and or figure out what other investment vehicles we could utilize to provide income either for a set number of years or provide income for the rest of her lifetime to help fund what those minimum monthly income needs are. And so if you're the type of investor right now and you're taking money out of your stock market account, you're the type of investor that I think maybe really needs to take a look at the advantages of the independent income system, because if and when the stock market goes down, you end up in a situation where you're forced to sell off more and more of your shares to get the same paycheck. You actually negative compound your account. You accelerate the risk of outliving your money. Oftentimes, people want to make these shifts after something bad happens. When you look at it, there's really two ways that you can lose money in the stock market. First, if you own a company and it goes bankrupt, you pretty much lose your money in that stock. The other way is you buy an investment, it goes down in value, and you panic and you sell it. And so people will switch from growth when they think things look good and go to safety when the market's doing bad, kind of a losing strategy. And a lot of that comes down to, again, not understanding what the plan is and what the purpose is for each of your accounts. Your safe money is going to be the money that's going to be there designed to provide you your income that you need. Even when it comes down to the stock market part of the portfolio, I think it's very important that you understand the methodology and the philosophy that is being used to pick your investments. On an earlier segment, you had talked about knowing what you own, knowing what your disciplines are. And that's where it can get very challenging when you go on the internet and you read all of these different articles about all of these different, hot investment ideas. And what happens is you end up, short-term chasing what oftentimes can be losing opportunities. Our discipline and a good example of something that we typically like is we like companies that are cash rich, companies that are low debt, companies that have a high profit margin, companies that offer a competitive advantage and or are needed on a daily basis. And so when you own those companies and you know why you own those companies and you know the financial health of those companies, then you become the type of investor that instead of panicking, when everybody else is panicking, you're going to find opportunities and say, how do I take some of that safe money and how do I get more of those growth assets when everybody's panicking and doing that? So yes, there is a lot to be said about that, but again, the solution to that is taking a look at the independent income system. And then one of the things that we can also do here at the office for you is take a look at stress testing your portfolio. So if you're wondering in your situation, do I have the right mix of safe versus risky? Is my portfolio optimized to try to achieve the highest outcome for the level of risk that we're willing to take? If you have more than $250,000 saved up for retirement time, we'd love to have a conversation with you, and we can give you the printout so you know exactly what the numbers are. We'd be happy. All you have to do is call the office and say you'd like that independent portfolio analysis, and we'll put that together for you.
I like to think that the messaging around retirement has changed a bit, where it's not just this one finite set of time, this one final set of time. There's different chunks, different phases in there. In the same way, you need to understand there are different phases of your money. You won't need money for X number of years or Y number of years, or this is for the more immediacy, things like that. So you can have different allocations as far as risk, as far as safety. You can preserve and grow at the same time. That is where the independent income system comes into play. And so to get a better understanding of how that's going to work for you, to see how it all works for you, reach out to the team right now, 419-794-3030. You can also go online and find out more about the independent income system at arhq.com.